Hey traders, what's going on? Jamie Saettele here. It is February 17th, 2016, and we have, I guess, the minutes from the last Fed meeting coming up here in an hour. So, we got here, Fed minutes. That's Thursday. Yeah, right here. Okay. So, yeah, Fed minutes from 26-27 meeting. So that's in an hour. I'm not really too, I don't know, don't have any thoughts, I guess, really on the matter of Fed minutes in an hour. Just be aware that they are due in an hour. So we've got a couple decent trades on at the moment. We're long CAD, long Aussie against the dollar, so it's short dollar CAD, long Aussie dollar, short Kiwi dollar right now. I'm not too, I don't know. I'm pretty bearish the dollar in general at this point. You can see especially the way that oil's acting, breaking up through a big level. We had all those charts in recently, and last night's swing update talked about the potential for a bigger move to the top side. We had this impulsive rally, right? You can see here 1, 2, 3, 4, 5. The pullback ended up finding support at a really good, confluence level. 50% retracement of the rally, pretty close to the week open, which is 29.08. Just a good reference point. And, from an Elliott standpoint, this would be the former fourth wave. Okay, the fourth wave of one less degree. So what you do here, kind of 1, 2, 3, 4, 5, ABC, what have you. This base of the former fourth wave is support. Okay, so crude now is really testing the big level again. Okay, if I go out to say a 4-hour chart, you can see the slope all the way back to October 9th, the October high. Okay, since then, the peaks and troughs have been on this slope. All right, and as noted yesterday in the swing update, talked about, mentioned the raised floor, right? Raised floor, indicating raised floor. What's that mean again? For those not familiar, or if you need a little brush up on a raised floor, you've got the low not coming into support. So we were looking at support basically on this well-defined slope line, which was support here. Okay. Instead, we bottomed before it, obviously nowhere near the slope line that provided support for the previous low. The sharp turn higher did find resistance at slope resistance, but this next one, the implication when you have a raised floor is that you're going to break through a resistance. Okay, so that opens up basically, the 33 area. You got the month open up there and other longer term slope areas as well. So that's what we're kind of thinking as far as crude oil is concerned at this point. And obviously dollar CAD is reacting in kind as well, down pretty big today, over 1%, pressing down towards range lows. But what I want to do is spend a little more time on this dollar CAD, on this crude oil chart real quickly, because again, it does give you a good sense of what may go down with dollar CAD as far as understanding possible pattern, possible levels, where we might find, some sort of support in dollar CAD, with when crude trades up to a specific level, if that is indeed what's going on. So let's move to a different chart. It's a daily chart. Okay. Oops, wrong. Hold on. Wrong workspace. Okay, this is a daily chart for crude. Okay, so the big slope to follow here, and again, this is the continuous futures contract. It's a little different than what you would see if you were looking at TradingView, which is always going to plot what's called the nearest future or the first front month. Okay, and what we've got here is very clean, just a trend line. Okay, and parallels from that have obviously been pretty influential. Okay, so the next level obviously is about 33.83, which is the month open, which is also the next parallel. So that is, from here, 33.80 is almost, 10% or so from where we are right now today. Market's up almost 7% today, crude oil is, and obviously, moves of the 10% variety have really been, almost the norm lately. I mean, crazy moves, but, you could get up into that region. So 33.83, I just kind of would mark that down for March crude oil. That is an area, if we get up into that region, kind of see what dollar CAD's doing at that point, might be an area that, where you find dollar CAD support, aka crude, comes off a little bit. But either way, we could be really trying to form some hell of a low down here with crude oil as dollar CAD has formed a top. So, one of the big things that I've focused on recently and have written about it, a ton is, is the fact that we've got, hold on. Is the fact that we've got, this dollar CAD peak way back in January, excuse me, back here mid-January, January 20th. And remember the post from that last summer, there was a post talking about what happens when you get this divergence, with crude and CAD. If one leads the other, they will tend to come in line at some point. So, here is crude futures. And here's CAD futures. Okay, so this was the divergence, right? They both bottomed together, and this would be CAD. So dollar CAD topping that week of 120. Well, then crude went to do its thing and make a new low, while dollar CAD continued, really higher. Went through consolidation, obviously, and then today's move is actually getting up towards the range highs. But this is actually a pretty bullish event for both these things. There's a divergence at the turn. That kind of divergence is typical of much more important turns, and that's the case in general with markets in general. Meaning, when you have divergence, let's think of the dollar index, for example. Okay, the dollar index, you've got the U.S. dollar index. That is, you've got the U.S. dollar index trading to a new high just a few weeks ago. Remember, a few Thursdays ago, or Fridays ago, excuse me, is the last day of January actually, and we got that fifth wave high in the U.S. dollar. But that was not driven by all the components, right? They were all very much doing their own thing. You didn't have euro at new lows. You didn't have pound at new, or you did have pound at new lows, but that was about it. You didn't have Aussie at new lows. Dollar yen was not at new highs. I mean, it was very fractured. So that's what, we're kind of seeing across it's kind of the theme right now, if you will, for markets, in my opinion, is kind of all this divergence that's going on. How's everyone doing out there, by the way, right now? Haven't had any comments or anything. Usually there's something. Can you guys hear me? Yes, that's what I was kind of wondering. Am I alone? Am I alone here? Make sure I might be talking to the wall in front of me here. All right, so we've got that. Let's look at the S&P. So real quick summary on CAD, right? Or sorry, on crude oil. That 3380 region, it's 10% higher. So, I'd kind of keep an eye out for that. So if you get up to 3380, at some point tomorrow or Friday, whatever, and dollar CAD is doing, whatever it's doing, if we get 10% higher in crude, dollar CAD is going to be lower more than likely, but we'll see where CAD is at that point and, what the best path forward is. On dollar CAD, I just tweeted out that chart for dollar CAD talking about, if we break this is 3620. And I should really probably say 3575. I should probably give it a little more wiggle room. 3575. If we get down below there, there really is a hell of a break. And I would be looking towards the 130 region at that point. 2 legs down from the high, from the January 20th high, okay, would put you at 2965. All right. You could get support before then. There's, I think, a 200-day average or something is around 200 days, 31.95. So right here, 32. So that would be a level to pay attention to as well. 55-week, 30.17, which hasn't been touched since July of 2014. So we could certainly have some sort of a quick repricing, if you will, or free fall in dollar CAD. So here's how to approach this going forward. And I'll just put up a chart, a naked chart here. I'll go 4 hour. Okay. All right. So we're coming up on this trend line here. Okay. That's fine. You can put that in. What I am following, what's super interesting to me, are these two levels. Okay. All right. So this line here, which might look completely ridiculous to follow at this point, but hang on. Okay. This was basically your first line, your original kind of, resistance line, if you will, off the first two highs. Did end up being support. Okay. For bounce. Ended up being pretty good support in early February. Excuse me. This is 4 hour reversal support, by the way. You can see right here. Close of that level. Okay. The next one, it draws this one right here. Okay. Now, what's so interesting about this one is that when we draw the pitchfork, the Andrews line, it's the same slope, right? It's the same slope as this line. So it tells me the market's kind of adhering to this slope, if you will. All right, so go down to hourly chart. And what you're looking at here, if indeed we're on our way to much lower levels, I think at this point, you probably would want to see resistance in dollar CAD, right? It's resistance, right? You probably want to see resistance back on here somewhere, okay? Obviously the current situation being as volatile as it is, I would be not trying to be super precise here. So, pick your spots, zones. If you notice over the last few posts when we were going into this, trying to kind of figure out this dollar CAD short position and the entry for it, I gave it a zone, and I was really kind of like 38.80 to 39.07 as the area to be a seller in dollar CAD, rather, because understand the current situation is volatile. I'm not trying to tell you within a couple ticks, obviously, where the resistance or support is going to be in a market like this. Okay, so what I would be looking for at this point would probably be resistance around 37.60 the way this market's moving, that might happen during this webinar. But you can see that was a high up here, all right? Back in kind of the recovery high off of the February low. Also 38.16, this is, the year open price. I consider it basically one of the most important prices, and for good reason. I mean, you've seen how many times the market comes into this, this year open. We've seen it numerous times, and over the years, I mean, it can end up providing some super great trading entries. So the year open price being 38.16 clearly is an important level. And if you were to get up there, it would put you back at the upper parallel. So, keep an open mind at this point. At this point, I'm just kind of happy to still have something on with the short on dollar CAD, see what it can do from here. If it bounces, we start finding resistance, we might look to enter and add to this trade on the short side and press it a little bit, if you will. All right. Okay, so that dollar CAD, I think we're pretty set and clear on what's up there with dollar CAD. Let's go into the S&P 500 real quick, because that'll kind of take us into the euro, the Aussie a little bit, and the yen. All right. Okay, so S&P 500. The S&P, the analog, all about the analog. At this point, kind of considering time more important than than price almost. As far, price always rules because that's what you're trading. But kind of considering, the entry time is when, as far as when the turns are coming, obviously, time is kind of helping out a little more here. So, we talked about over the weekend, I was talking about, I guess, what was it? 1890 for resistance. Obviously, we've blown through that, but was looking for, on the chart, you can see looking for a top on 218. So I was looking for a top on 218 near 1890. Obviously, 1890 printed like on Monday during the holiday. The futures were open, but we've done that and more. So what we have here for a 218 top, okay, let me bring that analog chart in. $218 top would obviously be tomorrow, okay? So that puts you basically looking for a top tomorrow, and guess what happens tomorrow? The month opening price. Okay, we're actually getting really close to it. The month opening price is, and this is futures, not SPX 500, which is, again, the index. If I go to the daily chart, here's the daily chart, 1929 3/4, okay, is the month open price. We're getting really close to that level. There is a wave count showing up here that's quite clean, and it does fit pretty well too with the analog. So that's solid because you get two little individual pieces of information that kind of are in agreement. Clean wave count here though. Check it out. 1, 2, 1, 2, 3, 4, 5, and that's 3. And then this would be 4. Okay. Now, when you have an Elliott, this is when Elliott gets useful. I haven't been able to do stuff like this on the indices for a long time because we just haven't had price action like this. We've had all kinds of slop going on. Okay. Well, in Elliott, if this is what's going on, if there is going to be another turn and a leg lower and a fifth wave before we turn up higher again, and again, that would be like this. That would be in line with the analog, right? Suggesting we top up here tomorrow, or around there, tomorrow or Friday. Friday, I'm partial to Friday highs just because trading for so long, you tend to see a lot of Friday highs and people get stopped out trying to short Thursdays or buy Thursdays, get stopped out, and then you go to the Friday extreme, turn around, and then that's the short-term trend chain. But looking here for a 218 top, maybe in S&Ps, lower into February 22nd, which would be your fifth wave. Okay. So if that's what's going on, Elliott channeling. Okay. So basically putting on, waves 1, 1 and 3, and going from the top of wave 2. Okay. So that puts you right here as well. And of course, we also have slope up here too. If you remember this, it's a little different, but it's the same idea. Is in, we're extended the parallel off here. You actually have basically two different trend line methods, one being Andrew's pitchfork and one being Elliott channeling, that arrive, at the exact same level for resistance, more or less, which is about the month open, 1829.75. So if that were to happen for turn down in 5, either way, if we don't go to a new low, I think we do, but either way, I'm expecting resistance up here, okay, at this 29.75 region. Mark's saying, so fifth wave below 1809. Yeah, that's what I'm kind of going after. Now I will say, let me say this though, Mark and everyone else, fourth waves. And again, if that's what this is, a fourth wave, and there's at this point, we're well within the confines of this being a fourth wave. Fourth waves can take all kinds of shapes like triangles and flats and what have you. So, kind of keep, don't expect this to happen like tomorrow or something, right? These things can be drawn out. Fourth waves oftentimes are triangles because they come after third waves, and third waves, obviously everyone gets real excited, everyone gets in the market at that point, and you need a lot of sideways activity to kind of, get rid of all the exposure, if you will, and reset the market for the next move, which is lower in a fifth. So that's what I'm thinking is that we do kind of trace out maybe a period of range activity and then spill into a new low. Okay. Either way, as we move into tomorrow, the analog suggests we should be looking for a high. At some point, this analog is going to stop working, but it suggests we should be looking for a high into tomorrow. And then we do have the price levels to work with. The month open, 1929 and 3/4. And then, of course, all the slope stuff that I just went over. Okay. The month open, by the way, for SPX 500, if you're trading the CFD, is 1936.3. Okay. All right. So we've got that. Why don't we also take a look at the old DAX? So the DAX has blown through this, this, I don't know if this is valid or not. This this Andrews line. It's, I'll keep it up. I'll follow it, see if we do anything. But we've gone back into basically the range here on the DAX, kind of overthrown. There's still, I would pay attention for resistance though, still from former lows. So, look, this is interesting in its own right. What's happening with stock markets the last 2 days and what is a funding currency right now? Well, obviously the yen, but the euro is a big funding currency at the moment. And the euro's doing jack right now. The euro spilled last week on, a little rebound in equities, and spilled on Monday and a big rebound in equities. Yesterday, not much, obviously. Today, it's kind of treading water, even though equities are up big time, and the DAX is obviously euro, priced in euro, so that's what you want to watch. So that tells me, this might be coming to an end as well. All right, and so euro holding its own support as well. Let's see here. Okay, here's the euro chart. Again, we have Fed minutes coming up, so I want to see what happens here. But I'd like to kind of pull the trigger on this euro long probably sooner than later. Even if we're going to be in a range for a little bit, the next resistance on here is probably about 1240. Highs up here, weekly open 1240. Okay, but this is support. And remember the big volumes wrote a post, I don't know, back on the breakout. So it was probably the 2-3 post that we talked about. See if we can find it, because we had a lot of volume charts in that in that post. So probably the 2-3 post. Yeah. Okay. So this is the daily. Let's look at the daily. Okay. So that was the 2-3 post, right? Okay. So we talked about, you do get sometimes a period of back and fill, basically, some range stuff going on when you get these high volume levels. Okay. This is a good example actually back here in May. Breakout higher, kind of volatile over the place, came into it, rebounded, came into it again, rebounded again. Good example in June too, traded around it. It was, support, resistance, support, resistance, support, resistance, finally resistance on the way lower. So let's bring it up now, and what we've got, it's the same chart. Okay, well, here we are. So we've come back into that level now. Took a few weeks, but here we are. So this really is the breakout level at the close of the breakout day, which was high volume, which means it's a very vested interest play. The market level is extremely important because there's just a ton of reason to defend there, right? If people bought on that level there, they're going to defend it when it comes in. So we've got that spot market close there is 1103, 111.03. I think today's low is 111.05, 111.06, around there. So we're more or less at support. Again, I'd give it kind of a range here. So I'd say support is down to, for euro, here's the hourly chart. I'd say it's down 11.03, of course, which we just basically hit, and I'd give it down to the low that you had on 2.8, which is 110.86. Okay, so if we do come in Fed minutes for some whatever reason, and S&Ps want to push a little higher into the resistance that we just talked about, which on ES, which is S&P futures, wants to push up into what, 1929.75, and SPX 500, the CFD, wants to push up into 1936.3. Then maybe you do get that euro to visit 110.85 or so before it is able to go to at least 112.40, if not up to the 115 region. And remember, why 115? 115 is just a huge confluence, right? And here it is, and it ends up, up there on February 24th. Give or take a day, but that happens to be right towards the end of the seasonally bullish period for euro. And I, throughout my time trading throughout the years, I can remember plenty of peaks in the euro at the end of February. I remember it. I just do. it's funny how this stuff works out, but it would not be the first time that you get a move up into that level. Of course, it's also the high from last February, okay, as you can see right here, 115.33. So it's just such an attractive level to get up to. This 115.30 slope confluence. And if you're, where's this line coming from down here? Okay, you go to a weekly chart, you can see it better. It's important to know where these lines come from, so you're not like, well, this guy's just got lines all over his damn chart. Okay, so we've got the high here for the first high, the April 2008 high, and just draw a line from there off the May high. From 2011, and then it was resistance, okay, into 2014. Extend the parallel here, and the median line there ends up being important for several reasons. The reason to pay attention to it, you've got support here in 2012, cut through the gap, okay, last year, which is still closed, by the way. That gap's at 120, okay. It's still closed, by the way, that gap, or I should say still open, not closed. Still open, by the way. And then that gap, okay, down, and then it was like literally like pit perfect resistance back in August on the kind of initial downdraft in equities. So yeah, big spot. All right, so that brings us to, we talked about stocks, to euro. Take a look at dollar yen. And we'll look at some Aussie, some Kiwi. All right, so dollar yen, nothing really else to say other than what's been said the last number of days. If I'd like to see it get back up into 115.50, right? It's up here, the breakdown level. So, daily chart. Ended up finding support at the old wedge. Okay. It's pretty wild. 112.30, the gap ended up being the closing low. For the most part, closing low is to 112.40s. But this right here is obviously what we're following for now. And the breakdown level, 115.55, okay, that ends up intersecting basically the most recent support on a slope basis, over the next few days. So, if this head and shoulders thing here that has been going on and that confirmed on the move last week, the target of that again is 105. And if we're going to get down to that target at some point, then I'd expect us to get resistance up here in the mid 115s. Okay. Now again, volatility. Okay, so give yourself some room. You've got 50% retracement of the move down, the latest move down, post BOJ at 116.33. Also, mentioning BOJ, be careful. Look, this morning it came out that Banxico, which is the Bank of Mexico, Central Bank of Mexico, is starting an intervention program, okay, to basically defend its currency. I haven't read the details, but I saw dollar mex down, whatever it was, and I saw then a headline. So, there's going to be a lot of, and they want a stronger Mexican peso right now because they can't go into complete free fall. But dollar yen, Japan wants obviously a weaker currency, so they're going to do what they can to try to surprise markets. And COT right now is at levels that would be consistent with a crowded market. We talked about this last time of course, okay, and you're going to get plenty of volatility on both sides, okay? So what this shows you right here, sorry, this is the one you want to see, right? So commercials are basically their most short yen, and speculators are basically their most long yen or short dollar yen since all the way back in January of 2012, which was almost at all-time lows, okay? So it's possible that you go up to 115.50s and you trade in a really volatile range for a while. Okay, and that too and that's probably it's actually what I think is going to happen. So pay attention to the next move, obviously, that you're going to be doing. And for me, that next move is looking to sell up into the breakdown level, looking for opportunities to give those orders in the swing updates, of course. But after that, don't expect it to go to 105 like in a month, right? It may very well be headed lower back to 112.40s, which is daily reversal, okay? And you could be zigzagging for a while before we get a bigger break. And, if this whole analog thing with the S&P keeps up, then the big break is probably going to be in April or May. Okay, so, don't forget this. The markets have their own schedule, okay? We all want them to do things on our time, but they're going to do them on their time, okay? When everyone wants the market to do this or wants the market to do that, or it looks like the market has to do this or it looks like it has to do that, the market's got its own schedule. It's going to do it on its own time, all right? So I'm not sure how much further down dollar yen can go in the near term, being next few weeks with, such a crowded position, basically. You might need, maybe this move higher here gets us a little bit of washout. We'll see. But just a little pep talk there on some dollar yen. So basically 115.50 is looking for that high. All right. What else we got? Aussie dollar. Do like the way it's trading, of course. Short term, here's the short term Aussie. I put up a chart. You know what we're looking at here, of course. But this fork here, I mean, this thing has just been the sliding parallel up here has been crazy. I mean, like to the pip, you've gotten all these little peaks. So, resistance, 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 resistance. As of right now, it'd be about 71.90s. It's also this median line, pulling off a little bit now. At this point, we're basically Leon asking, actually, let's go back real quick, because that's a good question. Leon asking about dollar yen, thinking maybe has it bottomed. Well, that's what I'm saying. So, it's not going to do you a whole lot of good to get like, I mean, unless you're putting on like a long-term options position or something. It's not really my thing anyway. But do I think it's bottomed? I think it's bottomed for a little bit, right? So, we're getting up into the levels though where I'd want to be selling it, right? Even if we have bottomed, coming back for a retest back into 112.40, right? Today we tested the weekly open of 1339, but up into again 1550, 1630 region, that's an area that at least me, I've got to be a seller up there, okay? Because we had this breakdown that was former support, watch for it to become resistance, and then you know what? 1550s, 1630 stops have to be above the breakdown high level 1750, so that'd be 1760 or so stop. I like to pick a random number like 1766, and then I'd be targeting down towards daily reversal, which is 112.42. So 112.50, leave a piece on in case the end of the world comes. So that's how I'm looking at dollar yen. Okay, if you start to get, say, let's fast forward a little bit, Leon. And let's say that the market does come in down to 112.40s, and then you get some nice action down there. Maybe you have, I don't know, a little key reversal day or whatever, okay? Maybe you have a short-term pattern or something that occurs down here, whatever. Then yeah, sure, maybe it's time to look on the long side at that point. We're obviously getting way ahead of ourselves here because we haven't even gotten to the retest yet. But that's how I approach this. That's how I approach these things. Okay, you got your zones to trade into. I know what's already happened. What's already happened is we have a head and shoulders that has formed, and now we're coming in for the retest. Okay, and that retest is the opportunity to get on the short side of this trade, or at this point, what has to be considered the right side. Okay, I still don't. At this point, there's no reason to not look down towards the 105 region. Okay, there's just not. That's what the target's pattern is, or the pattern's target is, excuse me. And there's a lot down there. You've also got this old trend line. You watch for this old trend line, which was resistance before the big breakout after BOJ back in October 2014. Well, you know what? That's pretty darn close to 105 too. 105. High January 2014, low October 2014. Okay, so lots going on down in the 105 handle. So 115, if you were to, it's one of these things where you could possibly put on a trade to sell 115.50s with a 117.50 stop, 60 stop, excuse me, and a target at 105.50, and you might go on vacation for 2 months, come back and be a very happy person. I'm not saying to do that. I'm just, this is one of those setups that don't happen too often. So let's pay attention to 115.50s. If only we did, yeah, right? I mean, that's one thing about calling the high and trading the high, right? You can go back on TradingView or the stuff that was written on SB. I mean, we called this high, but again, putting, shorting it when it's up there is a little different story. Anywho, we were on Aussie, I think. So yeah, Aussie. We've got. Oh well, yeah, the market will be here for us to trade. All right, let's look at Aussie real quick. Okay, so we've got really long-term support slope-wise, like super long-term, like really long-term. This was posted on January 17th, as you can see, and this is a monthly chart, and this goes back from an Andrews line that goes back to like 1987. Here's your sliding parallel support. So far, that's still the low, and that's good to know. All right, so we've got that going for us. We've got the long-term median line, sliding parallel, etc., etc. Tweezer bottom at September low and January working higher. Pay attention to this. You see what this says? This says the big support is up here at this 55-week average, which is on this 50 line, which was support and resistance last May. Okay? And then we have the daily chart. So there's our little quick overview. This is the line that we're following in the long-term chart. Okay. And basically, you guys can see all these lines, right? Make it black so that they're a little more, you can see them. Basically, we're looking for this line up here. Okay. Yeah, so you can see right here. It's like, this should be up at like 70, like 74.40. or so. And then the one I've been following here on the daily is this one. You know, it's a little flatter. You could follow this one too. Again, not too sure which one of these is going to be correct. Initially, I was following this one, but then I changed to this one. It's flatter. Whatever. Either way, this is kind of all you need to know, I think, which is looking for 74.40 before you get, you know, potential for big resistance again. And this is actually what could be happening with the Aussie right now. This could be a flat pattern. A flat pattern from the September low. Flat patterns. Subwaves 335. So that means A, B, C. Okay. A, B, C. And then that puts us here, giving us kind of like wave 1, 2, 3, 4, 5, whatever. Okay. Maybe something like that. And then that would be wave C. A, B, C. Okay, so if I put a measurement on this, so let's say that this is indeed waves 1 and waves 2. 73.88, interesting. This gives a measurement as high as 76.45, something to keep in mind. Again, I do think this is a big level to pay attention to, this sliding or 50 line, which was resistance last May. So, you know, don't forget about that or dismiss this level, even though the measurement's up here. So yeah, that's something to watch for. You know, you can also have, there's, you know, again, I say it all the time, but this the thing with Elliott is there's always, you know, this is A, B, C, right? But let's say that you do get a move higher here and it's, you know, A, B, C instead, and that all of a sudden changes to labels W, X, Y, because then it's known as a complex correction instead of a flat, because you ended up with a 3-wave pattern finishing the rally instead of a 5-wave pattern. And then everyone's like, well, what the hell, man, you changed your count. Well, you know, so that's why it's more important to know the levels instead of the count. After all, you're trading price, you're not trading labels on a chart. Okay. All right, so that's what the deal is with Aussie. Could go a little higher, and then actually end up with a possible selling opportunity. All right, so last thing is a few comments on the US dollar in general. So let's go back to the let's go back to the what's it called? Swing update from the 4th. Okay, this is an important thing to remember. So remember, okay, this was at this point we actually had this. This is the, I'll bring up that same chart here. Okay, so we had the US dollar. Okay. All right, here we have. This was the same thing we were following back then, okay? Back then we were like right here. Okay, we got the rally into resistance, pulled off. Now we're rallying back up into resistance. Okay, so same idea. The point then, the most important, this was before NFP, heading into tomorrow, thinking for a low near 12.015. Okay, the low is not 12.015, it's 12.041. That was NFP. We went up like immediately thereafter. So there really wasn't much of a you know, of a capitulation. It was kind of like we already capitulated, I guess, with the prior 2-3 decline. But the bold letters here, the most important aspect of all of this is sentiment after the rebound. If it's widely believed that a rebound, or after a rebound, that the dollar is headed higher, again, then we'll have a good indication of whatever bottom was just made was false. Okay? So this is the low that was just made, and this is the rally that's underway right now. When I go to Google, again, go to Google, just type in US dollar. Let's see what pops up. Okay. Again, you're looking for language, okay? And language is in like specifically, kind of a forecast within the headline. And you're looking for reporters, news outlets, well, most heavily read stuff. Okay, this daily effects stuff here desperately needs good data offset losses. Doesn't really say a whole lot. Dollar strengthens against most main rivals from the Wall Street Journal. And it's not really a headline to fade. It's just, it is what it is. It would be different if it said U.S. dollar expected to remain strong or U.S. dollar headed to new high, something like that. Let's see. The case for a short-term dollar rally improves. So that's actually from Daily FX. Look, that's Chris over here. So that would be actually something that would be worth. It'd be better if it was like a, more of a kind of like a journal, like a journalist or like a newspaper type of thing, rather than, like a market piece. But get the idea. That is the kind of headline typically that are the ones that appear near tops. Let's see. Yeah, there's not a whole lot going on here. So here's one. U.S. dollar soars after holiday weekend. It's from the New Indian Express, though. Who the hell reads that? What is that? This one says, this is from Bloomberg. I don't know. That makes me question it. It says the end of the line for U.S. dollar rally. So either way, we'll be trading both sides. We'll be trading both sides of the dollar. Being on, obviously having Kiwi, Aussie, CAD, different positions, long dollar on Kiwi, short dollar on CAD and Aussie at this point. And then with Euro, I'm looking to be long Euro against dollar, as mentioned earlier. Not sure if it's 1085 or 1103 or whatever. And then waiting on 1550 and dollar yen. So they're, good levels around, good levels, playing out. That dollar CAD thing could get exciting. We could also end up in an elongated range, but at this point, having responded so well and having actually penetrated, 3780s and come off so hard here this morning, that's a good sign, right? Because say if we would have stopped here, at 3790 or 3780 or whatever, and we would have worked higher from that region, you would have had a raised floor again, okay? And that would have been not so bearish anymore. So what we have here is actually more bearish. Even if you rally all the way back up to 3820, okay, over the next day or two, is actually still fairly bearish, the structure, because the support is coming in down here at the median line rather than before it. That's a good sign, okay? And obviously, if we do end up breaking through here in the trend line and everything like that, then again, we're looking all the way down towards the 130 region, maybe even as low as 2966, which is the 100% extension, 2 legs from the high that was made back in January. All right. Okay, so I'm going to head out. Mark saying, quick look at Kiwi. Sure thing, brother. So I don't have anything good on the short term on Kiwi. So here's my deal with Kiwi right now, okay? All right. This could be something on Kiwi. Maybe the entry was a little too soon. Either way, bearish is valid below 66.75, okay, up here. You know, the big thing for Kiwi here is that you do have, you know, this median line that goes way back, all right? You know, 2011 high, 2011 low, 2014 high, that median line, which was support last February and support last March, and then consolidation, you know, around, what was that, in June, we gapped through it. It's clearly a very important line. It was resistance back at December 29th. Okay, so kind of just, you know, below there while we're in, you know, I'm bearish below there, put it that way. So looking for opportunities to be on the short side. You know, the NFP high here, 2.5, November 5th. Okay, bearish, bearish, and then yesterday's bearish day basically, to me, gave the signal that any sort of strength into the week open price or into 66.26, which is daily reversal resistance, the 2.5 close, is an opportunity to be on the short side. Okay, maybe it's wrong. Maybe we head all the way back up to this resistance line, which is the median line, up at 67.80s. If we get all the way up there, we'll be out of the short well before then, obviously. But to me, there's just too much going for this on the short side as far as the bigger picture. Seasonality, okay? Seasonality turned over as well this week. Seasonality is bearish for the next 3 weeks. Here's the short-term chart. Okay, so I've got the high over here, 2.4 high, okay? And then the low on 2.9, and then the high on 2.11. All right, you do have a 50% retracement of this move at about 45, so, or 41, so pretty close to now. And yeah, that's it. So, you know, Mark's saying it just can't be bearish Kiwi. That's, you know, I understand. I mean, sometimes you just, whatever, you just don't see it. I get it. And this could be totally wrong. Another thing, too, is obviously we had the long Aussie position already, but long Aussie Kiwi, it just looks so good, too. And we could be setting up for something big there. So by being short Kiwi here and already long Aussie, you're basically long Aussie Kiwi. It's just in a synthetic manner doing it. So that's that. Okay. But yeah, that's my deal with Kiwi, is that like that long-term chart, as long as we're kind of under this, it's very difficult for me to be, you know, super constructive. And I see, you know, you have a sharp rally and what could be a 3-wave decline. I get it, you know, but just going on price and, you know, the weight of evidence to me, I just want a little piece, you know? So we'll see. Hopefully we'll get a good idea of what's up over the next, maybe over the next hour, you know? If this minutes and all that crap comes out and does anything, we'll see. All right, so that's it. I'm going to wrap it up here and get this posted. Again, minutes from the last Fed meeting in January are actually due in about a minute here. So, you know, good luck. We'll see what happens. We'll be following dollar CAD and Aussie dollar setups and whatnot going forward, watching for that euro low, maybe very close. May have already gotten it. Who knows today? 11, because we're so close. That 1085, 1103, it's basically support. So we're right there. All right. All right. Everyone have a great rest of your week and take care.